Hey everybody, what's up? Today we will be going into performance shipping. Now, I just made a video on this company a couple days ago and it's actually done very well, but I want to do my full actual official review and financial analysis of the company. Also, I got a headset. Hopefully this mic is better than my laptop's microphone, so we'll see how it goes. If you like it, that's great. But yeah, let's get into performance shipping. One last thing before I forget, make sure to subscribe if you haven't. Also, comment below any companies you'd like me to look into. I try to get to as many as I can. I usually do at least 5 or 6 a week, give or take. So I try to get to as many as I can. Make sure to comment, make sure to subscribe. So for performance shipping, you can see they do transportation services through ownership of container vessels. So basically they have multiple vessels and they just charter them with other companies that just carry cargo worldwide. So overall, this company has fairly consistent income, I would say, as it's mostly contract based. Now, if we head over to the snapshot here, we could see the big thing about this company is their market cap is literally $20 million, which sounds bad. I know. And I talked about this in the video that I made the other day, but this company has incredibly low market cap. Now, when we get into some of the financials in a little bit, you'll understand why this could be very interesting. Another thing, target price is at 575. Current stock price is at not that. We're looking at 168 right here. So overall, very, very interesting. Now let's move ahead to the growth summary here. Now, obviously, the book value per share looks a little bit interesting. I believe that's just with the way it has been for the last few years, and they're just projecting that outwards. Now, in my opinion, the more important things to look at are the sales and the EBITDA, which are very, very strongly projected over the next 1, 3, 5, 10 years even. 7% sales growth over 10 years is really, really solid. 15% EBITDA growth is insane. 25% EBIT is crazy. That's per year. This isn't over 10 years. This is per year for the next 10 years. So that is really, really solid. Another few things I will get into later are their financials, but just some shout outs. Strong sales growth, EBITDA growth, obviously, we just talked about. Very good. Their margins are very solid. Estimated to be, or sorry, not estimated, but their net margin, the average has gone up so much in the past few quarters that it's honestly very impressive. They've clearly come a long way in the past few years with their margins, but we will get into that in more detail in a little bit. So let's get into the financials. So just as a little bit of an announcement, I am not going to spend so much time doing this whole analysis anymore. What I'm going to do instead is just show the bullet points. So just so this part doesn't take so much time, I'm going to speed it up a little bit. So I'll go through everything here and then talk about the most important parts all in one go. So for their income statement, you can see their sales are fairly solid. Again, they looks like they're going to take a dip in 2024. One thing that could be from is dropping shipping prices, where shipping prices were incredibly inflated over the couple of years past COVID, and now they are sort of normalizing. But one thing to note with this is that even with that, they're making significantly more revenue than they were many, many years ago before this. So that is something positive to look into. Also, while that is happening, their net income looks like it did not decrease too much. Their operating income looks solid. So overall, their performance, even with dipping in the past year, has been fairly decent. Another thing to look into here is their total shares, which you can see has gone essentially from 2 to 12 in the past 2 years. Now, this company had some kind of unique circumstances that caused this to happen. Another way you could look at it is like their EPS is 1, which I honestly don't know how that happened, but definitely some interesting things with the company that I would recommend some people looking farther into. I will not be, just because it'll take hours to figure out everything, but definitely some interesting things going on here. But overall, the potential with their sales growth and their operating income is still there. So their balance sheet is one thing I very specifically want to highlight here. Now, you can clearly see solid cash, assets are growing, short-term debt is very little, long-term debt is very little. They paid off a ton of long-term debt the past year, which is great. Um, Retained earnings, if you look, are negative, but clearly going to be positive within the next maybe couple years. I'm assuming with their earnings growth, though, it'll probably be more like 1 or 2 years instead of 5 or more. But overall, their balance sheet looks really, really good. Now, the most important thing here is they have 300 million in assets, but yet the market cap of the company is 20 million, which basically just means if they just got bought out in liquidation, this is like a 10x of the company easily. Just with their assets, it is a 10x of the stock and the company. So that is something to definitely consider. Um, for their balance sheet, I'm honestly doing the full ratings across the board, other than retained earnings, which are negative, but they are coming back. So overall, I think this is the most enticing thing about their financials. It's just they have so much in assets, and it's mostly just their property, plant, and equipment, with what I assume is obviously their tanker ships, but they are worth so much money that the company, even just selling them alone, is easily a 10x from its current value, which is fascinating, at least to me. Next thing I want to look into is their cash flows, which you can see operating cash flow is positive for the past 3 years. Investing cash flow looks a little shaky, but overall solid. I mean, it's mostly capital expenditures, and they have been selling some assets, which honestly could be a good thing with the whole restructuring process. But even just in the past year, they sold more in assets than the entire market cap of their company. So there is something going on here where the market just doesn't want to touch this company, but at the same time, the company is performing fairly well, has more than 10 times its own value in assets, and even just their operating cash flow in 2023 is 3 times their market cap. I don't know what else you want to hear. But another thing here is it looks like there has been a slight reduction in their stock over the past year, which is cool to see. You can see it has been positive for the past 2 years before that, but overall financing activity has been negative. You can see that very large debt reduction we saw earlier. And then also we saw first free cash flow positive in over 5 years for this company in 2023. I'm assuming it will be positive again for this year. I mean, it could also not be, just considering the estimates right now are showing it being most likely around negative 15 million, give or take a little bit. But overall, cash flows look fairly solid for the company. So looking through their uses of cash here, again, you could see that free cash flow going positive for the first time in 10 years, which is awesome. Their debt situation is a little shaky. Obviously, you can see the big payment in the past year, which is solid. But overall, they've kind of been half and half with issuing and exercising, but at least there is consistency here, which I like. And again, very little issuance in the past year, which is good. Again, there's also their stock situation where you can see they have been continuously issuing without really too much repurchases, just two small repurchases here. And then overall, cash on the balance sheet, you can see, is looking pretty solid. So last but not least, margins, arguably the most important. So they honestly look really, really good. Gross margin is double the 5 year average. SG&A to sales is a fraction of what it was over the past 5 years. Operating margin, you can see the 5 year average is negative along with net margin. And they are very, very high now. Net margin at 63% in 2023 is insane. I'm not really sure how it gets higher in percentage than operating margin, but I'm sure there's a better explanation than I can give for that. ROA, ROE both look phenomenal. Huge gains over the past year, which is awesome. And if we go all the way down here, we can see the long-term debt to total equity, which is another one I like. And it is at a fairly reasonable low of 20%. So overall for this company, ratios look phenomenal. I love to see this. Okay, so this is their most recent earnings report. And one thing to note here is that the way I'm interpreting this is that they most likely went public at a time when they really shouldn't have. And now they are working to do a large restructuring where they basically reissued their own company's shares between 165 and 225, as well as one at 1575 per share. But I'm sure that's more for I honestly have no idea. But what seems to be happening is they issued many, many more shares at a much lower price than what they were formerly at. And now they're just working on restructuring and basically improving cash flows. So that is the first big point there. The other big point is a lot of new growth recently. So tanker fleet supply up a little bit and up a little bit more from 2023. Looks like expected demand to grow by 4%, which is solid. Don't know what this means, but probably important. Looks like their tanker utilization is increasing slightly and increasing slightly more in 2025, the estimate. Also, there are many, many other things here. I will not read through everything, but on to the next thing. So this is basically, I'm not going to read any of this, but basically they secured a new lease for one of their tankers, and it looks like they are going to make a decent amount of money on it. This was just announced October 24th, so just some positive news there. And then another thing, they secured a contract with Oil Major, no idea, but $33,000 per day is pretty solid. So that's just another contract they have. So overall, looks pretty good in terms of recent news and reports for the company. So here is their recent stock chart over the past year, over the past couple months. We can do the past year here and see they started right around $2 a share. Right now they're at 168. It looks like they're mostly heading down towards new lows. You can see their last earnings report they did actually beat on, and based on all the results I saw, it was fairly solid. One thing that does stand out to me here is that there's much different gaps in between their earnings here, which is definitely something interesting you don't see very often. But one thing just to note with this company, if you are looking to do more research into it, they have had a very long fall. You could see they've had a few reverse splits. They've dealt with some rough things in the past. Looks like the company has been going for well over just about 13 years now, which is kind of crazy considering where they're at. Now, again, their results have been looking very good. So hopefully we can see some long-term sustained growth here. But overall, just some things to note the risk that is almost certainly involved here. And again, it does look like on the technical side, they have broken a support over the past 2 weeks or so. So you could see there was a fairly solid support line right here going across that they are now fairly well under. So that is definitely something to be thoughtful of. And I mean, they could, of course, always reverse whenever, but right now it's looking like they will drop short term and then hopefully continue back up. I'm sure with this upcoming earnings report in a few weeks, actually in a few months, it'll help them out as long as they show some good performance. But other than that, that is about it for this. So this may come as a bit of a surprise to you, but the final score I gave them from my own financial analysis was a 75% right here, which honestly, if you've watched any of the other videos, is kind of on the higher side. So we'll enter them in here. PSHG 75%, 12, 12, 2024. And if we go to the sort and do this, you can see they are right in par with companies like SMCI, Palantir, SoFi, Disney, Shopify, Robinhood, now Alibaba even. Now, one thing to note with this is that while this does sort of make them seem like, oh, this company is just like these other companies, it is not. They are a very, very, very small fraction of any of these companies' market caps, including something like Robinhood, which is a bit smaller. So just to be clear on this, they are nowhere near the same league as these other companies in terms of their performance. However, just based on my rating scale, this is where they fell. So that is just another thing to consider. But anyway, that is all I have for performance shipping. Hope you enjoyed. Hope you learned something. Make sure to do your own research whenever you're investing. Do not listen to me other than for informational and entertainment purposes. But make sure to subscribe if you haven't. Like the video if you want. And that's about all I have. So have a good one.